Next up here, let's talk about my possible buys watch list in the order of those and why. Okay, so here's my possible buys watch list there. What do you think? I hope you like it. So first stock up here that is my number one that has me the most interested in my entire buys watch list right now is Salesforce, right? This is a somewhat newer position for me. I've added it in the public account. I don't think I've added it in the Patreon portfolio yet. And I believe I've added it in my private portfolios as well. But CRM, I really like that stock right here. It hasn't benefited at all in terms of the stock price from AI. But I believe they're going to actually be a huge beneficiary of AI over the coming years. And I don't think people see it yet. And so I actually like the way they're positioned. And never bet against Benioff, man. Benioff's a beast. Benioff is a beast. So in the stock's been, as far as the valuations come way down from where it used to be as far as trailing 12-month P, forward P. I think the company can grow double digits for years to go in the future. I love it. So yeah, Adobe's my number one right now as far as a stock I want to buy and continue to buy, and make it a bigger weighting in my portfolio. Adobe's number two. ADBE, I know a lot of people hate this stock, but I'm like, the company's great. Like, look at the numbers they put up, quarter in and quarter out, phenomenal. Look at the balance sheet. Like the balance sheet, income statement, cash flow, top 10 company in the world. I mean, just incredible. They continue to innovate, right? They're going to push the boundaries on AI. I'm sure they'll make a ton of money from that over the coming years. I like Adobe. Like, I really like Adobe, right? That's my number two. Number three, Amazon. Amazon, this one might be higher, but it's already a huge position for me. But Amazon remains a buy. It remains a buy when you look at the e-commerce business, how much growth that has over the coming years. When you look at the AWS business, right? I think they're going to have a major reacceleration of growth in 2026, which is going to be very exciting. We might even see a glimpse of that actually in this upcoming quarter. That's going to be huge. The ads business has, a long runway of growth ahead of it, right? And then they got all these other smaller businesses that have big opportunities as well, right? And with what they're doing with Bedrock, like, that's going to be a big AI beneficiary over the coming years as well when it comes to Amazon, right? Fourth is Google McDougal. Google McDougal, I understand the stock's made a massive move this past 3-4 months. Huge move, right? Google stock is still a buy. Like, look at the forward P of Google. What are we looking at? A forward P of 22? A do-si-do? With the Gemini opportunity, with the most dominant search. Remember, didn't I just show you guys Google's still the sixth most downloaded app on an iPhone on a given day in the USA? Like, it's insane, right? Didn't I just show you guys that a moment ago? Right here. Or right here. Right here. Look at this. Look at this. Google. You think like everybody's got Google already downloaded. Like, no one's downloading Google anymore. They already got it. Still the sixth most downloaded free app on a daily basis on iPhone. That's insane, right? By the way, Meta, Threads is number 3. Threads continues to boom. Whew. Like, that's a really exciting opportunity, Threads, by the way. But anyways, I don't want to get off subject in regards to Meta. And by the way, Meta's a buying right now too. That would be on my possible buys watch list if it wasn't already such a ridiculously huge position for me in the public account, right? What is it, 1.2 million or whatever, right? Number 5 is Nike. Nike reports earnings tomorrow. I hope they go down. I don't want this. 2026, I have my blessing. 2026, go up, Nike. You go up as far as you want to go. But actually, right now, I'd rather have it go down. I would love to just add a little bit more Nike before the end of this year. And then you do your thing, Nike, okay? But I'm almost done buying Nike, by the way. Just so you guys know, almost done. My hope is this is one last earnings kind of drawdown. And I get one last kind of big buy-in before the end of the year. But we'll see. If it starts going up, it is what it is, right? But that's number 5 there. Number 6 is Cheesecake Factory. Cheesecake Factory remains a buy. Like, Cheesecake's a buy every single week. It doesn't matter if the stock's $30, $40, $50, $60. Like, obviously, it's a better buy at 30 than it is 60. But regardless, like, Cheesecake's a stock that will probably be several $100s in future years. As Flower Child gets expanded, as North Italia gets expanded, right? And it looks like rents are struggling in regards to that space. So I wouldn't be surprised if Cheesecake over the next 2 or 3 years here gets some very favorable, like Cheesecake's, we know Cheesecake's got an incredible opportunity to expand Flower Child and North Italia en masse over the next few years, right? We know they got to build a lot of them. Guess what? The crazy rents, a lot of these, let's just call it locations we're charging in for, basically building a property on it or renting a property on it, right? That's definitely been chilling out. Let's just call it that. Okay. Now, additionally, workers, as far as the economy goes, construction workers is more readily available than certainly it was a year ago or a few years ago at this point in time. So if we're in a weaker construction environment, Cheesecake could then build these North Italias and these flower childs for much cheaper prices than you might have thought, which could be very good. Now, additionally, if the economy is weaker the next 2 or 3 years, which it might or might not, okay, and if it's not, and the economy is booming over the next 2 or 3 years, and Cheesecake kind of their restaurant's going to be doing crazy volumes and crazy numbers, right? But if we're weaker for the next few years, that means the Fed's going to continue to lower rates. You'll eventually see that 10-year yield continue to come down, right? As time ticks on. It's not immediate, but it eventually comes down. And then what you could end up seeing is basically the ability for Cheesecake to then either raise money or take out debt at much cheaper prices is right there, right? So they could expand even quicker, and you can get more workers easier for Flower Child and North Italia concepts, right? So all I'm saying is, like, even if this economy is not what it's cracked up to be over the next 2 or 3 years, it's not the worst thing for Cake. Like, Cake's well positioned either way. Have the economy boom the next 2 or 3 years, they're going to be making fortunes of money. Have the economy weaker for the next 2 or 3 years, they're going to open up massive amounts of Flower Childs and North Italias at much cheaper prices, likely, right? So just something to keep in mind there, folks. Something to keep in mind there. Number 7 of these stocks is SoFi. SoFi stock obviously has been a big runner, but their growth rates are insane. And the long-term opportunity of SoFi is incredible. So it still is a stock I'm very interested in, right? Cava's actually moved up to number 8 now. That stock continues to just get pounded. We'll see. If Cava continues to go down all the way to Chinatown, I might step in Cava in December or January 2026 and start a position and then build it throughout 2026. But we'll see. We'll see. But that one definitely has my attention. It's moving up the ranks as far as me being interested in buying it, okay? Next one up here, Bath & Body Works. This is number 9 here. Bath & Body Works, such a consistent, great business, low forward PE, profitable, not a business model that's affected that much by a low consumer sentiment. Like, look at the business model. They still put up very, very strong, respectable numbers, even in a poor consumer environment, because they sell soaps and lotions and candles and stuff like that. It's like not complicated, but good business model overall. Whirlpool is my number 10 here. Whirlpool, obviously, I'd started a position, then I sold it off for a profit. I'm keeping an eye on it. I want to see what happens with the November Trump tariff situation. If the Supreme Court's going to overrule that, what's going to happen, okay? So I'm just keeping an eye on it all right now. If things go Whirlpool's way, then I might come in and actually start a decent-sized position, 26, right? And kind of bank on a housing rebound plus those tariffs on the international guys. 11, Planet, Spec, obviously. And number 12 is RH. I want to see that one get even pounded harder, though. I want to see it under 150, maybe even under 100, and then we can come in with that one. But it actually has a lot of risk. It's actually RH, borderline a speculative play. I know it sounds crazy, $197 stock, borderline speculative. It is actually right now.
Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We've got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with.
All right, let's get into Tom Lee, then we'll do some stock talk.
But it's good to have you back. I know you love this trade. But what do you make of what Mr. Griffin had to say?
Well, I agree with him. We're in a period where there is a super cycle and exponential growth opportunities within AI. But it doesn't mean every company that has an elevated valuation today deserves to actually have the capital, and that company may not even reinvest that capital properly to be a survivor. So I agree there is going to eventually be a shakeout. But I think valuations, strangely enough, are actually pretty reasonable today compared to 1998. Because, 1998 was that liftoff point before that final 18-month surge. And I'd say the best benchmark is NVIDIA trades at 26 times forward earnings. Cisco at that same exact moment was at 60 times. And Cisco's PE peaked at 210 times forward earnings. So NVIDIA, to me, is still a bargain at 26 times. It's cheaper than Costco and Walmart, which are close to 50 times forward earnings.
Sure, but all valuation.
You know what I like that Tom Lee did right there? Do you know what I absolutely love that he just did? He brought up math. Oh, it's brilliant. It's brilliant. He brought up math. NVIDIA trades at a forward P of this. Here's what Cisco was trading at if you want to compare it back to in the tech bubble days, right? Here's Cisco's PE versus Costco versus Walmart, those sorts of things, right? It was beautiful. That's beautiful. And that's how you play this game. That's how you play this game. It's a math-based game, right? You got to try to get your emotions out of it as much as possible. Math matters.
Isn't created equal. And I'm not especially clear as to whether Mr. Griffin looks at the valuations of.
But let me push back against Tom Lee here, okay? Because he brings out an interesting point. He says, Nvidia's trading cheaper on a forward P basis than, let's say, Costco or Walmart, and obviously Nvidia's growth rates blow those companies out of the water. Here's where I'll push back against Tom Lee, okay? He's right in regards to that. But the difference is Costco and Walmart no one's worried about like Costco and Walmart sales being in a bubble and like their revenue start to plummet in 27 or 28. That's not a realistic worry about Costco or Walmart. But that is a realistic worry in regards to NVIDIA. That does not mean it's going to happen, but we know these chip cycles last 3 to 5 years, and then there's a painful part of that chip cycle that comes after that. And so maybe this is totally different and like NVIDIA just grows to the sky in 27, 28, 29. I doubt it as well. I doubt it. I doubt it happens. I think there's going to be a time period where NVIDIA's revenue might even go negative, might start going down, right? What year that is, that's tough to predict, but I think that's a realistic possibility. And so that's why people are not willing to pay a great premium like they would, let's say, a Costco or Walmart, because Costco or Walmart is going to put up their numbers regardless. NVIDIA, when you're in one of these big chip cycles and everybody and their grandma, all it would take is let's say we get a market decline, the economy gets hit, let's say some of these AI programs aren't taking off as rapidly as you might have thought. Could these companies, the Metas and the Googles and all these companies, start pulling back on chip sales in 27, 28 from NVIDIA? Sure. Could they start going with a more cost-effective option like AMD? Absolutely. That would all hurt NVIDIA, right? And so, could more of these companies start doing more and more custom solutions like Amazon and Google are doing? Sure. Like, these are all things to factor in. So that's my pushback there in regards to, NVIDIA and why people are not willing to pay a big forward P for a stock that has had insane growth the last few years. They believe, there's a realistic potential that fades in the next, let's call it 2 to 3 years.
With NVIDIA, for example, and says, well, that looks a little out of hand. It reminds me of late 90s activity before the dot-com bust happened.
And that's why I said, like, for a long time now, what have I told you guys in regards to NVIDIA? NVIDIA's just stuck. It's stuck between about 125 and about a 200-ish level. And that's just what I think is going to continue to happen with that stock. When people are feeling great, it's going to bounce up to that $200 level. And when people are feeling down and out in regards to NVIDIA, it's going to go down to about 125. And I think it's going to be there for years. Not like a few months. And I've been saying this for like a while now. I think I've been saying this for like a year now at this point in time. The stock is just range bound. And the reason it can't, why can't NVIDIA go $400 or $500? Because I don't believe people are going to think this chip cycle is going to continue to go up 20, 30, 40, 50%, 27, 28, 29. If people became confident in that, then you could say, okay, NVIDIA could go $300, $400, $500. But outside of that, people just won't be willing to pay a big price for NVIDIA.
As much as he looks at other names which have gone, parabolic and they're related to AI, and that's where he says, whoa, we're placing way too many bets on what might happen in the future. We think we know what's going to happen in the future as it relates to NVIDIA and some of the other hyperscalers, but it's a whole host of other names that have literally ripped over the last 3 months, at least, that might bring investors a little bit of pause.
I think that's correct, Scott. There's a difference between a company being scarce in the public market. Like, let's say there's an IPO of a company and it's the only way for you to get exposure, versus that company being truly scarce to the ecosystem. So I do think investors have to discern, is this company going up a lot because this is the only name out of a possible bevy of private companies, or is this the company truly unique and one that is so scarce, I got to give it the N=1 valuation?
I mean, I think he looks also at a stat like JP Morgan Asset Management's Michael Sembalist brought to us today from his report. And he's good at what he does, okay? Quote, AI-related stocks have accounted for 75% of S&P 500 returns, 80% of earnings growth, and 90% of capital spending growth since ChatGPT launched in November of 2022. Now, some would say, well, obviously, and all of that might be justified, but those are large numbers. Those are really large numbers that have carried a boatload of the weight of this move in the market since then.
Yeah, and that's a moment in time, Scott. I mean, just to give some perspective, NVIDIA is about 8% of the S&P 500 market cap weight, but it is also 7% of the earnings. So it's not necessarily distorting equity valuations. And in terms of what companies are excited about, you know, if companies are saying that AI is something where they're actually allocating capital, and many are, of course, are seeing productive gains, I think it's justified that that would be what you'd expect to be the first wave of investment and spending, is around directly into the ecosystem. But of course, over time, we'd expect that spending then to deliver productivity gains and other benefits. So that means if AI, and you know, I'm comfortable with the idea it's a super cycle, we should see a broadening of the benefits and then also the broadening of opportunities over time. So it's probably a moment in time makes sense, but it should be broadening.
I mean, I look at a stock like Oracle, for example, only to pick it out because it's up more than 30% this month. Now, it obviously had the moment around earnings where it added such a tremendous amount of market cap after that event. I bring it up if only because it was initiated sell today at one firm on Wall Street, in part because they suggest that you've got some really aggressive assumptions that are coming with this stock. Now, it's down 5% today because a lot of these names in what you would consider the momentum basket have rolled over a little bit. But the notion that the assumptions are so big that there's inherent risk in and of itself within that.
Scott, I think that there is going to be moments where it feels like we're possibly topping, you know, and today is coming at a time when we have this Oracle report and stocks are generally soft. But number one, I think it's always really healthy to see corrections in a super cycle. But I do think it's really difficult for someone to actually ring the bell at the top. And in fact, like if we look at Palantir or Tesla or NVIDIA, I think that there have been, 25 bell rings at the top at every waypoint along the way. To me, I think the real test is going to be that we see a day where investors are convinced there's absolutely nothing that is wrong with the thesis and it's bulletproof, and yet stocks make announcements and they go down and companies actually have negative returns. I have not seen that yet. In fact, to me, it's reflexive to see that every time markets flatten out after posting gains, we have a lot of people declaring the top. To me, that's a really healthy sign that there is very little conviction about this bull market, and I do think it's healthy to actually see the skepticism. So I'm not opposed to seeing like these reports, but it's healthy.
Do you think that equities are especially vulnerable here, as we wrote in our intro today, as BTIG suggests?
Before we go further here, the problem, to get back to NVIDIA, chip sales, everything going on there, a big problem for somebody like NVIDIA could be, let's say, I think my guess is, based upon mathematics, is I believe ChatGPT, in terms of the growth rates it's been showing, it's going to slow substantially in 26 and then slow even more in 27. That does not mean like all of a sudden no one's going to use ChatGPT. No, it doesn't mean anything like that. It's just, if you look at the growth rates of ChatGPT in 2023, obviously off the charts. It's like a new thing, like everybody is starting to download it, start to use it, right? 24, unbelievable. It starts to kind of reach more mass level, 25, even to another level, right? But I think as we go into 26, 27, the growth rates will start to slow substantially. Now, when those growth rates start to slow substantially, that's when investors are going to be like, wait a minute, like the company's already valued at $500 billion. Are they going to try to value it at 600 trillion or 600 billion, 700 billion? I don't know if I'm willing to pay for that because the growth rates are now down to this number, right? Because people start running their projections and their math, these investors, and they start saying, you know what, I don't know. And then so maybe ChatGPT doesn't get as much funding, which then means they don't buy as many NVIDIA chips, which could, maybe this is already happening. You see an investment by NVIDIA into OpenAI, that was a little strange, right? Like, okay, interesting. So maybe this is already a situation that's starting to play out behind closed doors. Like, I'm not part of those OpenAI investors discussions or the NVIDIA investor discussions that go on behind closed doors, but this is a potential that it's already starting in regards to that, right?
They are the most since the April low. Do you feel the same? I should also mention it comes within the same context of commentary recently from the Fed chair, who didn't go out of his way when he answered the question about the equity markets to suggest it's wildly overvalued. But nonetheless, he did say that stocks are fairly highly valued. He could have said, I think they're fairly valued. He didn't. He said they're fairly highly valued when he answered that question. You put that into the mix, too, when you consider your answer.
Yes. Well, I have a lot of respect for Fed Chair Powell, but I don't remember the last time any FOMC member actually said stocks are attractively valued, because I don't think it's their job to comment on equity valuations that way.
Fair.
And if we think about where, again, market valuations are, I'd be very concerned if the most important stock, like NVIDIA, was trading at a multiple that couldn't deliver returns. But it's the most important company in the world, 40% plus revenue growth. It's trading at 26 times forward earnings, which is hardly demanding for a company that makes a product that every single company in the world that is involved with AI actually needs. They can't replace it with anything else. So I don't think it's expensive. When you ask about April lows and valuation vulnerability, I think there's really two big differences. One is monetary policy was actually quite tight in April, and the risk was actually the Fed wouldn't even consider intervening, and yet markets managed to stage a 30% rally. Today, we have a Fed that's not necessarily pounding the table that it's in a dovish cycle, but they've understood that they need to now use their hand to support employment. That's a sea change, actually. And as we know, ISM's been below 50 for 31 months. It's the longest stretch in the history of the ISM index. I think if the ISM breaks above 50, that's a recovery in confidence in capital spending. That would support a broadening of the economy, and I think that would be good for equities.
Well, speaking of Fed policy, and you stay with me, Tom, for a moment, Ken Griffin also gave his outlook today for what he thinks the Fed will do after cutting rates.
So the one other thing people haven't really, I don't think enough people are factoring in regards to NVIDIA and where numbers go, but I think it's being factored in the market. That's why I think you're seeing NVIDIA's forward P where it's at. I think it's really twofold. One is the reasons I spoke about before. The second part, why are people not bidding that stock up, right? Look at how great the numbers are. We know the numbers are going to remain great for at least the next year. Why are they not bidding it up? It's the most well-known stock in the market. Like, should be easy money, right? Like, why are people not bidding up? The other factor that I think the market knows is finally NVIDIA's actually got competition. NVIDIA's had no competition the last several years. The competition's here, and it's with AMD. You look at the 350 series AMD has, they're in the game now. And in the 400 series coming next year, serious competition now. So it's no longer just, it's NVIDIA's game and there's no one else there. They actually finally have a competitor in the market. And, if people aren't taking AMD serious, I would start taking AMD very serious, very quickly. Very serious, very quickly. Ask anybody that's underestimated AMD the last 10 years. Ask Intel. Ask everybody. You do not underestimate Lisa Su and that team over at AMD. They get it done, and she's now, through the acquisitions they've done, through the developments the team has done there, they've got themselves in a good position to actually really battle it out with NVIDIA over 26, 27, 28. So you could have a twofold kind of issue going on with NVIDIA, and that's why people aren't willing to pay 50 forward P on that stock right now, like you might think they would, given the growth rates of that company. Because they're like, could have a slowdown in the chip cycle overall going, and then you got AMD finally becoming a serious competitor, and NVIDIA hasn't had any competitors. That leads to margin pressures. You get margin pressures, then you could get earnings per share pressures, especially if your revenue is flatlining or going down. All of a sudden, now people are like, oh my gosh, it's a business in decline rather than it's a business growing revenues at 50, 60, 70% clips. Something important to understand there, okay?